All right, so just to bring you guys up to speed, just what's relevant now, it seems like there may or may not be a big announcement from Trump. Maybe it's regarding trade or this tax legislation. It's pretty clear, though, that the market's more two-directional than it has been in the last couple months. And in a way, that's good. But for those that are having trouble adding, and I'm not assuming it's anyone in here, but it could be, or having trouble getting out of losers, that's where you're going to get in trouble if you go bullish to bearish, bearish to bullish. And what I wanted to make this meeting about was some simplicity to help keep yourself out of trouble and do something that I find real interesting, and I think you guys will too. And it's almost being, if you're decent, I'll get into it in a second, if you're decent at reading the market, and most of you guys are, after going through the edge and everything that we do, you're decent at saying, you know, I'm bullish or bearish at certain times. What I want people to start thinking of, and this is, again, just an exercise, is when you're bullish enough to buy it. And this goes for people that might be struggling as an exercise to get on track or back on track. But when you're bullish enough to buy it, I'm not telling you to sell it. I'm telling you, wait until there's that transition from bullish to bearish and sell it. In other words, go against what you think, not right away, not once when you think it, right when you think it, but you let yourself get shook out without actually being on that side. And it's a real interesting concept, because if you're decent at reading the market, but it just doesn't seem to work, or you're finding yourself in a little bit of trouble, instead of being part of the shakeout, assume that there's a lot of people with that bias. Let them get shook out and either go the other way or be on the backside of the shakeout. Because when you're not trading well, your timing is off. That's part of not trading well. You're too early, too late. So if you just think about, you got to think about that though for a second. You got to think about, when I'm bullish to buy it, I'm not going to buy it. My next trade's going to be a short if they shake out everybody else who's bullish. Because as you know, going through all this education, what is this? This is all about shakeouts. That's what markets do. If they're not shaking people out, they're not moving. They're not moving. And the more they move, the more shakeouts there is. There's always shakeouts. And a lot of people will blame the market, oh, it's got to shake me out and then go. But it's a product of the market doing what it's supposed to do in order to move. It's got to clear out the buyers or sellers. How does it clear out buyers and sellers? It's got to go after and clear out the stops. If it clears out a lot of sell stops, then there's sell orders above that get cleared, and therefore it's easier to go up. I'm trying to get you to automatically trick your mind. If you're trading well and things are clicking, you obviously don't need to do this. But if things aren't clicking for you, you're in a little bit of a rut, and we all go into them, back off and say, I'm bullish and my next trade will probably be a short. And think of how that sounds. I'm bullish, but my next trade will probably be a short if I could see a reversal, head fake, transitional moment, one of those B2B moments. It'll keep yourself from getting stuck. This is if you're not trading well. It's a real interesting exercise that I discussed with a guy that I traded with a long time about a week ago. Even if you're trading like mediocre, it's a great exercise. You're bullish, but your next trade will be a short. How the heck does that happen? Now, if you guys are trading well, and there are guys that are trading well, you obviously don't need to tip things over like that. But when you get back into that rut, to improve your timing, it's an exercise that'll be helpful. The other thing I wanted to cover today is the green up bars or red down bars just on the imbalance. I removed the edge zones. I didn't want too much showing right now. But green up bars or red down bars opposite of a trend. Here's what I mean by that. I'm on my laptop, so it's a little slower to get around the machine here. When the market is moving down, one thing we want to stay away from is selling a retracement back up when the markets are reversed and found a bottom. All right, so let me just illustrate that a second. If you have a market that's moving south, the last thing you want to do is, after it found a bottom, sell it. Not the last thing you want to do, but that's when you get stuck. Happens to all of us, because you're trying to, catch the downside, right? And a retracement for it to leak lower. How do you get yourself with a visual into a probability kind of situation where you're not doing that? What's going to help you, and I believe I squeezed down these imbalances. Put yourself with a visual that, see, this is a down bar, right? And this is an up bar. Now, it doesn't officially have an imbalance, but you could see that it sped up in here. And again, this is an up bar. So if it's coming at you fast on a reversal, you want to be careful. Let me show you some of these as an example. And I covered this in the room. I didn't cover it, but I talked about it in the room, I think last week, if you guys remember and were paying attention. So the market's bearish in here, if you see my cursor, right? Now it curls up, and on an up bar, it's got some green imbalance in here. And it should make you question getting short, because the downside, at least temporarily, could be over with. And you could be just stuck in some of this chop. It could help you be careful or get careful, and then see where it's sped up is the bottom of this chop. And again, this is after you had a move down or up. I'm just talking about moves down. Now, do you see when they start, this is a green down bar, this is a green down bar. When I say green down bar, a green imbalance in a down bar. But this pretty much is the first green imbalance in the first up bar. And you know it's a green imbalance when you're up here. You don't, it might not stick, it might, but when you're watching this market and you see it curl and go fast to the upside, and you know this information prior with all the tops of these consolidation rotations here, it should keep you from getting in front of the railroad tracks and trying to catch this continued downside. A little green imbalance on an up bar. Now here's one that didn't work, but it wasn't really weak, meaning the market is rallied and it's up in here. So here's a little green in an up bar, but it's not potentially reversing any kind of lows because we're not on them. We're actually strong. So it's not after a reversal. Here's an example. Here's two examples. And this is all from today. Up bar is in here. Green imbalance. The end of the weakness. Green up bar, imbalance, end of the weakness. Up bar in here, green imbalance, end of the weakness. Do you get any greens in here on this up bar? No. Could make it safer to sell a retracement. Now on the flip side, What do you want to see after a rally? If indeed you want to play a reversal, or stay away from buying a pullback on a rally and it's too late, it's already reversed, it went from strong to weak. You want to see some red in a down bar. You don't really see it until here and here. That was that tough moment after the open. You guys remember that from today? At least it was for me. They identified the range, but not direction until they finally went through those 73s. Is this making sense to you guys? Now, some of you might watch this already on your delta as you're following just delta, straight delta, and you see a down bar and the delta, red delta's picking up. And we've already rallied. And it's a moment to say, now I want to play a reversal. Let me walk you through the steps. After a rally, okay? Not after a rally, because we don't know the rally's over. But as the rally, I'm just going to illustrate. Forget about the charts now. Just watch the illustrations here. So the market goes up, and you're thinking that I think, it's a little toppy up here. It's a little heavy. I don't want to buy it, but I'm not necessarily looking to sell it either. And it comes down, no big deal. Comes up. Now a down bar has some red in it. Could show you that the aggressive or some speed is picking up on what could be the end of a rally. So you're looking for red in a down bar. DB. Down bar. Make sense? Or some green imbalance in an up bar. It's just another way to identify or recognize some criteria. A couple weeks ago when we were talking about conversation, real good conversation that Mark and I had, it was like, what am I going to look for to recognize when to take this reversal trade? If other things are telling me it's heavy, if other things are telling me to fade it, fade a rally, I want to wait for some speed to the downside to pick up. Ready, aim, fire. I don't know. Does that progression make sense? When I say I don't know, I want to make sure you guys know what the heck I'm talking about. Chuck, I don't think it was on your end, it was on mine. I had tech difficulties today in the trading room. So an imbalance here, to reiterate what Paul is saying or asking, an imbalance on an up bar after a down bar suggesting downtrend is over. Not after a down bar, after a sell-off, after a move lower. After a move lower, you're looking for an up bar with some green imbalance in it to at least do two things. Keep you cautious of getting short, thinking you're playing the downtrend that's going to continue, and maybe start to get closer to executing a reversal or a fade. These are signs, and I'm glad you said it this way, Christine. These are signs to not only, you're not looking for a continuation, you're looking for a reversal. These are signs to validate a reversal. Or be patient trying to go with the trend. For example, you always got to look at things that are not easy to read in real time, but readable in real time. And too many people will look at stuff that after it's happened, it's easy to recognize, but very difficult to recognize in real time. But not in here. After you get into this price, you already know, once you're up there, you don't know any of this has happened. But once you're at that yellow X, you do know that it came out of the hole kind of quick. So be careful fading it. How much meat is on the bone to the downside? This happens every day, but it happened today in the trading room where I told people, be careful trying to get short because I don't know how much downside meat is left. So after a sell-off, you're looking for an imbalance on the up bar. Like everything that we teach in here, not one thing is going to make you $1 million, but it's a collection of what could you recognize so you don't miss it every time it happens, instead of trying to stack too many things. Any other questions? Give me a little bit of a survey as to how guys are doing overall as these markets go from slow to decent volatility to slow, maybe volatile. Give me, not just today, as I do this in the trading room daily, but over the last quarter or second half as we approach the end of the year. Give me a G, B, or O. G for good, B for bad, O for okay. Coming out of the summer, the first, September, October, and half of November here. I'll let you guys think about it, put it in, I'll come right back. All right, who else? There's got to be more responses. Where are the rest of you guys? All right. Well, I'm not going to share names or anything. G, G, B, O, 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 B, O, O, N for nothing, G, and OK. So about half the people that are in here. Like I say with this survey in the trading room, that's done daily. And it's one thing if everybody's doing bad. It's another thing where you're getting a good amount of okays and goods that if you're doing bad, you got to, instead of making things more complicated, reverse it and make it simpler. You can't look at more. You have to go back to look at less. If you answered with a bad, what you're looking at and your progression isn't working. Strip it back down so that you could recognize something every single time. You're not going to miss that recognition. It could be something as simple as this, where you're going to look for fades only after a green up bar, after a sell-off. Because that's what I'm telling people. If they trade my money, I'm going to say, let's strip back what the hell you're doing, and let's build it back up with some simplicity. I just want to know you could recognize something consistently. Like I said, inconsistently bad or inconsistently good is bad. Inconsistently good is bad. I want consistency. Consistent bad performance is good because you could strip it out and say, hey, I'm being consistent, it's not working. If you're kind of all over the map and you're trading bad, then it's really difficult and frustrating. If you're consistent and you're not trading well, then you could just say, I got to start back at the beginning. or simplify the hell out of this. And even if you feel like you're oversimplifying it, do it. If you feel like you're oversimplifying, do it. Consistency is the first goal, and then profits are second. Now, the first thing I started this meeting out with, I want to end with, because it's tricky. It goes against how our mind works. And that is, you're bullish for the right reasons, but your next trade will be a short. Wow. Why would I do that? And it's because if you're not trading that well, it's a great exercise to not just do the opposite of what you're thinking, but waiting for putting yourself in a position to recognize a transitional moment because you're bullish. So now you're actually anticipating or looking for a shakeout of longs or just a transitional moment. And so you're only trading on the backside of transitional moments. And trying to make something happen, you're letting the market shake out the weak hands and then getting on the team. You're on the back side of something. I hope this helped. It's a short meeting. As we move towards the, let me stop the recording and then just go over a couple things that are more relevant timing-wise.